Hey everybody, welcome back to the deep dive. Today we're going to do something a little different. We're going to take a deep dive into Rich Dad's Increase Your Financial IQ.
Okay.
I picked this book because I know that our listeners love to learn new things quickly and completely.
Yes.
And this book is perfect for that. It's a very in-depth look at how to increase your financial intelligence in a world where money is constantly changing.
Yeah.
And the rules are always in flux. So
It's really a critical topic for anyone who wants to not just survive, but really thrive
right, because
in this new world of money.
it's not just about, how to balance your checkbook anymore. It's a whole different ball game.
Absolutely. And the beauty of this book is it really emphasizes that just having information about money isn't enough.
Oh, absolutely.
We're bombarded with information these days, but without the proper financial education, you
Yeah.
can't process that information into knowledge
That's true.
and ultimately make smart choices that will lead to financial success.
It's like having all the pieces of a puzzle, but not knowing how to put them together.
Exactly.
We just end up with this jumbled mess.
Yeah, you've got the box, you see the picture,
Right.
but without the framework, without that understanding of the principles behind it,
Yeah.
it just doesn't come together.
So the book uses this example that I thought was really interesting.
Mm-hmm.
They talk about how so many people think that their house is an asset,
Right.
but is it really?
That's the question that really throws a lot of people off. And it comes back to this idea of needing that financial education lens to see the full picture. Because without it, you might be making decisions based on assumptions that are actually working against you.
Yeah, it's like thinking you're winning the game, but you're actually playing by the wrong rules.
Exactly. And the book does a great job of laying out these kind of common misconceptions that people have. And it provides this framework for really seeing things from a different perspective.
And it also uses some really good historical examples that I thought were interesting.
Yeah, like what?
Like, for example, they talk about Germany after World War I, when they
Right.
printed tons of money to try and solve their economic problems.
Yeah, thinking that just creating more money would make everyone wealthier.
Right.
But what it really did was wipe out people's savings.
Right, because it created hyperinflation.
Exactly.
And the value of the currency just plummeted.
It's a classic example of how not understanding the system can lead to disastrous consequences.
Right, and it kind of makes you think about what's happening right now with the U.S. dollar.
Oh, yeah.
I was looking at a Bloomberg report recently,
Mm-hmm.
and it said that the U.S. dollar has lost over 13% of its purchasing power.
That's a significant amount.
Yeah, since 2001.
Yeah.
So in just, a couple of decades, we've seen a pretty big decline.
Which really underscores the book's point that the rules of the game are constantly changing and we need to be adaptable.
Right.
We need to be able to adjust to those changes, and that's where financial intelligence comes in. It's about being able to not just react to those changes, but anticipate them
Right.
and make decisions that put us ahead of the curve.
So the book argues that the rich don't actually avoid financial problems.
That's right.
They see them as opportunities.
They understand that financial problems are just part of the game,
Right.
and that the bigger the problem you can solve, the greater the potential reward.
So it's like that old saying, when life gives you lemons, make lemonade.
Exactly. Except in this case, it's when life gives you financial problems, find a solution and get rich.
Yeah, it's not about trying to outsmart those problems or avoid them.
Right.
It's about tackling them head on.
And using those challenges to build your financial intelligence.
So instead of trying to find that shortcut or that quick fix,
Right.
it's about developing the skills and the knowledge to really overcome those challenges.
And that's what ultimately leads to long-term wealth and success.
So this is where the book introduces what it calls Rich Dad's 5 Financial IQs, which is basically a framework for increasing your financial intelligence.
It's like a roadmap to leveling up your financial game.
I love a good roadmap.
Me too.
So let's dive into these IQs.
Yeah.
The first one is making more money.
Okay.
And this is something that I think a lot of people struggle with because it goes beyond just getting a paycheck.
Absolutely. It's about understanding the process of making money, not just the end result.
Right. Early in my career, I took a bunch of pay cuts
Really?
to gain experience in different fields.
Interesting.
And it felt really counterintuitive at the time.
Yeah.
But I was really focused on that process of learning how to make money.
You were invested in your financial education.
Yeah.
through those experiences.
Exactly.
And it's something that you've continued to do throughout your career, right?
Definitely.
Building and rebuilding businesses,
Yeah.
learning from those experiences, both the successes and the failures.
Like that time I started a nylon wallet business.
Oh, yeah.
Things were going great.
Hmm.
We were making money.
Right.
We had a good product,
Yeah.
but then we got hit with these cheap knockoffs.
Oh, no.
And pirates.
Pirates.
Literally pirates copying our designs.
Wow.
It was a huge financial hit.
But you didn't give up.
I didn't give up, no.
You adapted. You found a new niche.
We licensed rock and roll merchandise,
Okay.
built a brand,
Hmm.
created something unique
Yeah.
that nobody else was doing.
That's that entrepreneurial spirit that the book talks about.
Right. It was
Oh.
a tough lesson,
Yeah.
but it really solidified the idea that solving problems
Mm-hmm.
and finding ways to provide value are key to making more money.
It's not just about chasing a paycheck. It's
Right.
about developing the skills and the mindset to create something of value that people are willing to pay for.
Exactly.
And that's what ultimately leads to financial success.
So the second financial IQ is protecting your money.
Okay.
And the book uses this analogy of a farmer protecting their crops
Mm-hmm.
from bunnies and birds and bugs. And it emphasizes that the biggest threats to your money
Yeah.
can often come in these seemingly harmless packages.
It's not always the obvious criminals.
Right.
Sometimes it's people we trust, or even government policies that we think are there to help us.
Right, like taxes and fees.
Exactly.
Yeah.
Those can chip away at our wealth over time.
So the book gives the example of the AMT, the alternative minimum tax,
Right.
which was originally meant for like very high earners.
Yeah.
But now people making around $60,000 a year are getting hit with it.
It's almost like this hidden tax.
Yeah, it is.
That people don't even realize they're paying until it's too late.
And the book doesn't let politicians off the hook.
Oh, no.
It points out that both parties tend to contribute to the problem.
In their own ways.
Yeah.
Whether it's through taxing and spending or borrowing and spending.
Ultimately, it leads to higher debt
Mm-hmm.
and eventually higher taxes for everyone.
Yeah, it's a cycle that's hard to break.
It's a great point.
And it really highlights how financial intelligence isn't just about our own personal choices.
Mm-hmm.
It's about understanding the larger forces at play in the economy
Absolutely.
and how those forces can impact our financial well-being.
So the book also talks about how the financial system itself can sometimes work against us.
Oh, yeah.
And they use retirement fund management as an example.
Oh, that's a good one.
They explain how people often have very little control over their own retirement funds
Right.
and how these funds are often managed in a way that benefits the banks more than the individual.
They cite a report that exposes how high fees in what are called revenue sharing agreements within these funds can actually eat away at your retirement savings.
Yeah, it's pretty shocking.
It is.
When you really look at the numbers,
Mm-hmm.
and then they go on to talk about banks
Right.
and how they profit from the system.
Yeah.
And they give this really clear example.
What's that?
They say, imagine earning 5% interest on your savings
Okay.
while being charged 20% interest on your credit card debt.
That's a huge difference.
Yeah.
And that's how they make a profit.
It's like they're playing both sides of the game,
Exactly.
and we're the ones stuck in the middle.
It's important to be aware of these practices and to really manage your finances in a way that minimizes that impact.
Right, and the book goes on to talk about how even real estate brokers
Oh, yeah.
can sometimes be predatory.
Not all of them, of course.
Yeah, not all of them.
But there are definitely some out there who are more interested in their commission
Right.
than in what's best for their client.
I've had brokers calling me
Mm-hmm.
trying to push these hot deals
Yeah.
that when you really look at the numbers, they don't make any sense.
Right. It's all about that quick sale,
All right.
getting their commission and moving on to the next one.
That's why the book emphasizes how important it is to find a good broker.
Absolutely. One who's focused on mutual success.
Yeah,
Someone who understands that your financial well-being is directly tied to their own.
exactly.
Because when you succeed, they succeed.
Early on, I was lucky enough to find a broker who really got that.
That's great.
And he helped me grow my real estate portfolio significantly,
Even in a tough market.
even in a tough market.
That's impressive.
And it really proved to me that it's not just about finding somebody who knows the market.
Mm-hmm.
It's about finding somebody who you can trust,
Right.
who sees you as a partner.
Not just a transaction.
Yeah.
That's key.
Exactly.
And that understanding of financial predators and how to protect yourself from them is just a crucial part of building that financial intelligence.
It's like learning self-defense,
Yeah,
but for your money.
exactly.
So the third financial IQ that the book talks about is budgeting your money.
Okay.
And this is where they really challenge that old advice of saving what's left after expenses.
Oh, yeah.
They say, forget that.
Flip it on its head.
Yeah.
They're all about creating a budget surplus and paying yourself first.
It's a whole different way of thinking about
It
it.
is a mindset shift. You're making savings, tithing, and investments essential expenses
Right.
that you prioritize.
Right up there with your rent
Exactly.
and your utilities,
It's not something you do with whatever might be left over.
if there is anything left over.
Exactly.
So imagine two budgets.
Okay.
One where you're trying to save what's left after all your bills are paid,
Which usually isn't much.
which is usually nothing.
Yeah.
And then another budget where savings is a priority
Mm-hmm.
right from the start.
Right. You're building that financial foundation from day one.
You're constantly putting money into that savings account.
And the book has some great tips for creating that surplus.
Yeah. What are some of your favorites?
One that really stood out to me was using your expense column as a predictor of future success.
Oh, interesting.
So by analyzing your spending,
Mm-hmm.
you can see where your money is really going
Right.
and identify areas for improvement.
It's all about understanding your financial priorities and making conscious choices.
Exactly.
So the book also makes this point about using assets to pay for liabilities.
Mm-hmm.
Now, my poor dad was all about frugality.
Okay.
Cut back, save every penny.
Right.
But my rich dad taught me the power of leveraging assets
Okay.
to create income
Mm-hmm.
that covers the cost of your liabilities.
So instead of depleting your assets to pay for things,
Right.
you're using those assets to generate more income.
It's a whole different way of thinking about money.
It is.
And they give this example in the book that I thought was really cool.
What's that?
They talk about buying a Bentley.
A Bentley.
Yeah, like a luxury car.
Okay.
Now, most people would think, oh, I got to save up all this money to buy a Bentley.
Right.
But the book says, no, no, no. You use your assets to generate enough income to cover the cost of the car.
Oh, interesting. So you're not actually depleting your savings.
No, you're using your wealth to fund your lifestyle.
Yeah.
And then they make this really interesting point that I think goes against a lot of the conventional advice out there.
Oh, it's
They say that focusing only on cutting back when you're facing financial difficulties can actually be counterproductive.
really.
Yeah, they encourage you to focus on increasing your income instead.
So it's not about deprivation.
No, it's not about just living on ramen noodles
Right.
and, depriving yourself of everything.
Yeah, it's about expanding your possibilities.
Right.
Finding ways to generate more income.
Because cutting back can only take you so far.
Right. You can't save your way to wealth.
Exactly. You need to be bringing in more money.
They make a great analogy to businesses.
Mm-hmm.
Just like cutting back on advertising can hurt a struggling business.
Right.
Constantly cutting back on personal expenses
Mhm.
might not be the solution to overcoming those financial challenges.
I learned that the hard way
Oh, yeah.
when one of my businesses failed.
Oh.
I was in a lot of debt.
Mm-hmm.
And instead of just cutting back, I used it as motivation
Yeah.
to increase my income
Okay.
and find new ways to generate wealth.
So you turned that failure into a learning experience.
I did.
And it ultimately led you to embrace this concept of using good debt to
Exactly.
leverage your financial growth,
Mm.
which is such an important principle when it comes to building wealth.
It's not about avoiding debt altogether.
Right.
It's about using it strategically to create opportunities.
Exactly.
So that brings us to the fourth financial IQ, which is leveraging your money.
Okay.
And the book does a great job of clarifying that higher returns don't always equal higher risk.
Right. It's all about control.
Yeah, if you have control over your assets,
Hmm.
you can actually utilize leverage to achieve those higher returns.
Without necessarily increasing your risk.
Exactly.
And they use the example of a 300-unit apartment building
Oh, yeah.
to illustrate this.
And that example really highlights the importance of property management.
Right.
It's not enough to just own the asset. You have
Yeah.
to actively manage it
You got to be involved.
to maximize its potential and to minimize the risk.
Exactly. And in that example, they explain how you can increase rent, lower expenses, and enhance the property's value, all while maintaining control and using leverage responsibly.
It makes you realize that relying solely on paper assets,
Mhm.
like mutual funds,
Yeah.
can be risky because you have very little control over how they're managed.
Right. You're at the mercy of the market.
Yeah, and the fees
Oh, yeah.
can really eat into your returns.
So the takeaway here is that leverage itself isn't inherently risky.
Right.
It's the lack of control that increases the risk.
Exactly.
When you combine knowledge, control, and strategic planning,
Yeah.
you can utilize leverage to your advantage.
And the book also says, be wary of financial advisors. who are just pushing paper assets.
Yeah.
Because a lot of times they don't have practical experience.
Right. They're not actually investors themselves.
Exactly.
They're salespeople.
Yeah.
And their advice might not be in your best interest.
So look for people who practice what they preach. Exactly. People who have a proven track record of success.
In the areas that they're advising you on.
So, for example, when it comes to real estate,
Okay.
I'm a big fan of the buy and hold strategy.
Yeah.
Rather than flipping.
Right.
Because buy and hold allows you to build wealth over time.
Through rental income and appreciation.
Exactly.
And it minimizes those transaction fees and taxes that come with buying and selling frequently.
Right. You're not constantly churning your portfolio.
Exactly.
And that long-term approach requires a deeper understanding of market trends and the ability to identify undervalued properties with strong growth potential.
It's not about jumping on the latest hot deal. It's about developing a strategic approach based on knowledge and experience.
You got to have a clear plan,
Right.
be able to assess the potential risks and rewards.
Yeah.
And then one thing that's been really crucial for me in real estate
What's that?
is finding good partners.
Oh, yeah.
Because I think collaborating with the right people can not only bring you financial gains, but also offer incredible learning opportunities.
It's about sharing knowledge.
Right, yeah.
And experiences.
And sometimes those missed opportunities can teach you the most.
Oh, yeah.
You know, there are deals I look back on and I think, man, I wish I'd done that one.
But you learn from those experiences.
You do?
And you apply those lessons to future opportunities.
Exactly. So good management is key
Absolutely.
for increasing rent, lowering expenses, and improving the value of your assets.
And the book takes things a step further by introducing 3 advanced leverage strategies.
Okay.
OPM, ROI, and IRR.
So OPM stands for other people's money, right?
Exactly.
That's about utilizing bank finance.
Using other people's money to grow your own wealth.
So if we go back to that 300-unit apartment building example,
Okay.
they were able to make significant improvements to the property using bank loans
Right.
without putting in more of their own money.
Exactly. They leveraged other people's money to increase the value of their asset.
That's brilliant. And then ROI stands for return on investment.
Yes.
But the book emphasizes a specific way to think about it.
It encourages you to focus on tangible cash flow,
Okay.
not just estimated capital gains.
So it's not about what you think you might make in the future.
Right. It's about the actual cash you're receiving today.
Right. Real measurable results.
Exactly.
I like that.
And they explain how they were able to get an infinite return on that apartment project
Really?
by using OPM and focusing on tangible ROI.
Wow.
They improved the property with bank financing, increased rent, without increasing their personal investment.
That's a powerful example
It is.
of how leveraging OPM strategically
Yeah.
and focusing on real cash flow
Mm-hmm.
can lead to some pretty incredible returns.
Absolutely.
And then finally, there's IRR,
Internal rate of return.
which is a little bit more complex.
It is a bit more complex.
It's a way to measure ROI that takes into account the time value of money.
So it's for those who are really diving deep into those advanced investing strategies.
Yeah, if you're a numbers person.
Exactly.
But the fifth, and arguably most important, financial IQ is improving your financial information.
Now, this is where things get really interesting.
Yeah.
Because the book argues that information itself is the greatest asset in today's world.
It's not about tangible assets anymore.
Right. Not just gold or real estate.
We're living in the information age.
Exactly. And the ability to find and process information.
Especially the ability to tell facts from opinions
Oh, that's crucial.
is critical.
Because there's so much noise out there.
Right.
It's easy to get caught up in the hype
Yeah.
and make decisions based on misinformation.
Think about companies like MySpace and YouTube.
Okay.
They were built on information.
Right. Leveraging technology, connecting with people.
Exactly.
That's the power of information in today's world.
Yeah, and it's easy to get caught up in the excitement, especially in the world of investing,
Oh, yeah.
where there's always somebody trying to sell you on the next big thing.
Right. The hot stock tip. The get-rich-quick scheme.
The book gives some good examples of how relying on opinions
Yeah.
that are disguised as facts
Mhm.
can lead to some really bad financial decisions.
It's like playing poker.
Okay,
Cash flow investors are like players who focus on the facts.
the cards on the table.
Exactly. The numbers, the
Yeah.
fundamentals.
You're right.
Capital gains investors are often betting on opinions,
Yeah.
on the possibility of a lucky draw.
So they're hoping for the best.
Yeah, they might get lucky,
Right.
but it's not a sustainable strategy.
It's like gambling.
It is.
And I got to tell you, this reminds me of this crazy experience I had in Vietnam.
Oh, yeah.
I tried to buy gold at a discount
Okay.
behind enemy lines
Wow.
based on information that turned out to be completely false.
That's dangerous.
It was a dangerous situation
Yeah.
and a harsh lesson in the importance of accurate information.
And understanding market trends.
Yeah.
Because sometimes what seems like a good deal on the surface can actually be a trap. The book talks about how understanding demographics can be a valuable source of information for investing, especially in real estate.
Absolutely, like the trend of baby boomers retiring to certain states.
Right. If you understand those demographic shifts, you can identify investment opportunities.
But it's not just about spotting trends.
Right.
It's also about understanding the liquidity of different assets.
That's important.
Like real estate, for example, is less liquid than stocks or gold.
Right. So you need to do more in-depth trend analysis
Yeah.
and have a longer-term investment horizon.
So the key takeaway here is that information is the
Mhm.
foundation of wealth creation.
Without it, your financial decisions are just gambles.
Exactly.
And the book really emphasizes that it's not enough to just have the knowledge.
Right.
You need to know how to apply it effectively.
This is blowing my mind.
Yeah.
This whole idea that financial intelligence is more than just numbers.
It is.
It's about the big picture.
It's about developing the skills to navigate the financial landscape and make informed decisions that align with your goals.
And the book goes beyond just providing that information.
Right.
It offers practical advice on how to actually develop your financial intelligence.
That's what we'll delve into in the next part of our deep dive.
I'm excited.
Yeah, me too.
This is fascinating stuff.
It is. It's a game changer.
All right, so stay tuned, everybody.
We'll be right back. All right, so welcome back to our deep dive into financial intelligence, where we're really dissecting Rich Dads Increase Your Financial IQ. We've talked about the importance of financial education. We've laid out the 5 key financial IQs. Now, let's get into the nitty-gritty of actually developing those IQs.
Yeah, how do we put this knowledge to work?
Right, because it's one thing to understand the concepts, but how do we actually put them into practice?
Right.
And the book talks about finding educational environments that help you strengthen all 3 parts of your brain: the logical, the subconscious, and the interpersonal.
So it's not just about logic and numbers.
Exactly.
It's about emotional intelligence as well.
Absolutely, because financial success isn't just about crunching numbers.
Right.
It's also about managing fear and risk and having those strong interpersonal skills to build relationships and networks.
It's about the whole package,
It is.
not just being good at math.
Right.
So the book calls these transitional environments,
Okay.
and it mentions some really interesting examples.
Like what?
Well, the Marine Corps is one that really pushed me to develop my interpersonal intelligence. Being able to control my emotions and perform under pressure.
And your experience at Xerox, where you really honed your sales and communication skills, is another great example of a transitional environment that contributed to your overall growth.
Absolutely. Those experiences were invaluable. And of course, real estate investing has been a constant journey of learning and development, pushing me to work on all 5 of those financial IQs.
So you've had those experiences that have really pushed you to develop those different areas of your brain.
For sure.
And the book also talks about the importance of courage and entrepreneurship.
Making that argument that fear can be a major roadblock
It can be.
to financial success.
I know so many talented people who have the skills to succeed, but they just lack the courage to take that leap, to start their own business.
It's like they're held back by their own fear.
They are.
And this is where the book brings up the idea of mirror neurons.
Okay.
This concept that our brains are like sponges constantly absorbing and reflecting the behaviors and mindsets of those around us.
So the people we surround ourselves with have a huge impact on our own success.
Exactly. So surrounding yourself with successful individuals, those who embody the financial intelligence you want to develop, can actually influence your own journey.
It's about choosing your environment wisely.
Absolutely.
And finding mentors who can guide and inspire you.
Exactly. It's about seeking out those role models who have achieved what you want to achieve.
Right.
And learning from their experiences.
And that's exactly why I chose to follow my rich dad's path.
Into entrepreneurship and real estate investing.
Because it offered a different set of rules than the traditional corporate world.
Right.
One that resonated more with your strengths and ambitions.
Exactly.
Yep.
And it allowed me to achieve financial freedom much earlier than I would have otherwise.
And to share your knowledge and experiences with others.
Right.
help them reach their own financial goals.
Yeah.
It's inspiring to see.
Well, I'm incredibly grateful for the path that I've taken.
Mm-hmm.
And, you know, the book actually challenges that traditional advice of living below your means.
Oh, really?
It argues that surrounding yourself with success
Okay.
and constantly seeking those growth opportunities can be a much more effective way to achieve abundance.
So it's about shifting your mindset from
Yeah.
scarcity to abundance
Exactly.
instead of constantly limiting yourself
Right.
and focusing on expanding your possibilities.
And that ties into the book's emphasis on finding your unique talents and passions. It's not about trying to fit into some predefined mold.
Right.
It's about creating your own path.
And finding what truly fulfills you.
And the book emphasizes that dedication and drive are way more valuable than grades
Oh, absolutely.
when it comes to real-world success.
Real-world experience trumps the classroom every time.
I'm living proof of that.
Yeah.
I wasn't a straight A student, but I've always been driven to learn and to grow. And that's what's brought me success.
The book also mentions network marketing
Oh, yeah.
as a good environment for developing both interpersonal and intrapersonal skills.
Because it pushes you outside of your comfort zone.
Exactly.
It forces you to interact with people.
It's a way to overcome that fear of failure and build confidence.
Yeah.
Especially for those who might not thrive in traditional educational or corporate settings.
And it offers practical experience in sales, marketing, and leadership.
Mm-hmm.
All those things are valuable for
Absolutely.
building financial intelligence.
And the book also recommends hands-on educational programs and seminars that focus on real-world application and engage all three parts of the brain.
I like those kinds of programs because they're immersive.
Right.
You're not just sitting in a classroom listening to a lecture.
You're actually doing the work.
Yeah, you're making mistakes, and you're learning from them.
That's a core principle of developing financial intelligence.
Right.
It's an ongoing process of learning, experimenting, and refining your approach.
So Rich Dad's Increase Your Financial IQ provides a great roadmap
It does.
for developing those 5 key financial intelligences.
Mm,
But it's not just about reading the book.
right.
It's about taking action.
And applying those principles. It's about that commitment to continuous learning and growth.
Yeah.
That's what separates those who achieve financial freedom from those who struggle.
You know, one of the things that I'm really taking away from this book
What's that?
is that financial intelligence isn't just about understanding the numbers.
Right.
It's about understanding yourself, your strengths, your weaknesses,
Yeah.
and how to manage your emotions.
Especially when it comes to risk and uncertainty.
Yeah, the book really emphasizes intrapersonal intelligence,
Absolutely.
that ability to make sound decisions even when you're feeling fear or uncertainty.
And the book gives examples of how our subconscious minds can actually sabotage our financial success.
Like how?
Like panicking and selling when the market dips.
Oh, yeah.
Or spending windfalls instead of investing them.
Right.
Those are classic examples of how emotions can lead to bad financial decisions.
We've all been there, right?
Yeah.
Making those impulsive choices based on fear or excitement.
More than logic.
Exactly.
And the book argues that learning to control those emotional impulses and make conscious choices based on knowledge and strategy is crucial for developing that financial intelligence.
So it's not about ignoring those emotions.
Right.
It's about understanding them, acknowledging their influence, and learning to manage them effectively.
It's about developing that mental toughness.
Yeah. To stay focused on your long-term goals.
Right.
Even when you face those short-term setbacks or market fluctuations.
It's easier said than done.
It is.
But it's essential.
And this ties back to those transitional environments we talked about earlier. You know, seeking out those experiences that challenge you,
Yeah,
that push you outside of your comfort zone,
for sure.
can be so valuable for building that financial intelligence and resilience.
The book mentions this Wall Street Journal article
Oh, yeah.
about how even the smartest guys on Wall Street,
Right.
these brilliant mathematicians called quants,
Yeah.
lost a ton of money during a market crash
Really?
because their models didn't account for human behavior.
It's a great example of how relying solely on logic and statistics can backfire.
Yeah, you need that holistic approach
You do.
that integrates both logic and emotional intelligence.
It's about understanding both the numbers and the psychology behind financial decisions.
Right.
And the book also goes on to discuss the importance of linguistic intelligence.
That ability to communicate effectively,
Yeah.
especially in the language of business and finance.
It's not just about crunching numbers.
Right.
It's about understanding the concepts, the terminology, and being able to articulate your ideas clearly and persuasively.
Because that's how you build relationships,
Yeah.
negotiate deals,
Right.
get people to invest in your ideas.
And the book points out that our language often reflects our underlying beliefs and attitudes about money.
Oh, that's interesting.
So, for example, people who are struggling financially might use language that focuses on government assistance or handouts,
Okay.
while the middle class might talk about diversifying and living below their means.
Right.
And those who have mastered the game of money,
Mm-hmm.
the truly wealthy,
Yeah.
use language that reflects their confidence, their entrepreneurial spirit,
Okay.
and their focus on creating value and building wealth.
That makes sense.
And this is where the idea of mirror neurons comes full circle.
Okay.
Because by surrounding yourself with those successful individuals,
Right.
immersing yourself in their language and their mindset,
Mm-hmm.
you can actually start to reprogram your own subconscious beliefs and attitudes about money.
It's like learning a new language,
Yeah.
one that opens up a whole new world of possibilities.
And that's really what Rich Dad's Increase Your Financial IQ is all about.
It is.
Expanding your understanding of money, developing your financial intelligence,
Mm-hmm.
and ultimately empowering you to take control of your financial future.
It's a powerful message.
It is. I'm really glad we did this deep dive.
Wow.
This has been so insightful.
You've covered a lot of ground.
We have.
You know, those 5 key financial IQs, debunking some common misconceptions about risk and leverage, talking about the importance of developing both logical and emotional intelligence when it comes to money.
And I think the biggest takeaway for me is that building financial intelligence is an ongoing journey.
Absolutely. It's not a destination, it's a process.
It requires continuous learning,
Mm-hmm.
self-reflection, and a willingness to embrace challenges as opportunities for growth.
Couldn't have said it better myself.
So in the final part of this deep dive,
Okay.
we're going to share some practical strategies
Awesome.
for putting these principles into action.
Love it.
So stay tuned, everybody. Welcome back to the deep dive. So we're wrapping up our exploration of financial intelligence with Rich Dad's Increase Your Financial IQ. We've covered so much: the 5 financial IQs, the power of different learning environments, even the sneaky ways our brains can trip us up. But I'm thinking now, how do we make this knowledge work for us in real life?
That's the big question, right? It's like having a toolbox full of shiny tools, but no idea how to use them. The book really emphasizes that financial intelligence, it's like a muscle. You got to use it or you lose it.
So it's not enough to just read the book and think, okay, I got this.
Exactly. You got to put those concepts into action in your daily life. Make it a habit.
So what are some practical steps that our listeners can start doing today?
Well, one simple but super effective tip from the book is track your financial progress, kind of like keeping a money journal.
I like that. It's like holding yourself accountable.
Right. It's about awareness, becoming more mindful of your financial decisions. Track your income, your expenses, your investments, and look for patterns. See where you can tweak things.
And seeing those concrete results could be really motivating.
Totally. It's
Yeah.
like watching a plant grow after you've been watering it diligently.
Makes sense. The book also suggests finding a mentor or an advisor who can guide you.
Oh, yeah, that's huge. You don't have to do this alone. Find someone